So there's a few things. One is actually taking some lessons from fintech and understanding what's working and what's not working in that startup disruptive space. The other piece is looking back to their own core capabilities. So what are the things that are going to differentiate them in the future, and how do they bring those capabilities to life and expose those through APIs? A lot of the startup banks have focused on current accounts, payment services, and those are important from a customer perspective. But the real complexity of being a bank really sits with lending, mortgages, small business accounts. So actually the development of propositions around those more complex services will take time for the startups to build the capabilities they need, and actually the banks have that capability today. So it's understanding what really represents your core capabilities and doubling down on that. And also I think the days of I'm bank A and you're a startup, or a bank B and we compete with each other and it's a very clear line of gone. This is now much more actually, let's understand what good looks like from a customer's perspective. How do we potentially collaborate to deliver that value? I need to monetize my core capabilities, my experience, my expertise, but I might do that in terms of the overall proposition in conjunction with other partners. So it becomes much more of a collaboration in terms of focusing back on the things that you do to deliver customer value, not wanting to own the customer. So I think every time we've seen a new channel come into financial services, whether that's telephony, whether that's online, whether that's mobile, and now starting to move into more conversational interfaces and chatbots, that's had some impact on your legacy channels, but those legacy channels still operate today. We're seeing a number of sort of branches continue to diminish, but there will still be branches in the future. There will still be contact centers in the future. There will still be mobile apps that people interact with in the future. This is an additional channel. You need to understand how it fits with all of those other channels as well, and in a sort of seamless way. So will it completely remove the need for those other channels? No. Is it a really important future capability for you to add to your mix in terms of delivering a customer experience? Absolutely. And in a way that actually from an efficiency perspective can help you to really deliver a step change in terms of the efficiency of some of your more straightforward transactional experiences. End-to-end, those more routine tasks, so I can actually do the whole customer experience all the way through with a chatbot interface. The other way to look at it is for those more complex journeys, I can actually take half of that journey. So I may be able to take a customer through the initial stages of a mortgage journey, for example, before that experience is then picked up by a mortgage advisor. So again, I'm focusing my precious resource on the most high value aspects of that journey, and I'm letting the customer and a chatbot fulfill the more routine tasks, probably more effectively and more efficiently than I would do as a human agent. So again, it's making sure you've got that right balance and you understand where chatbots fit in the overall experience. What customers are looking for is efficient experiences, frictionless. They want relevance, so they want it to be pertinent to the thing they're going through at this point in time. It needs to be timely. It needs to be personalised, so it needs to demonstrate that you understand me as a customer, and it needs to be proactive. And those are the kinds of experiences we all experience from Amazon and Facebook and Uber, but I expect that now from my bank. So that's what customers are looking for, and they're willing to pay more for that if you can deliver experiences that tick those themes. So if you can embody delivering that, that will resonate and that will generate a customer experience that people will pay more for. Even the big banks now are thinking customer. They're building agile teams orientated around customer journeys. They're building the application and technology estate that's starting to bridge across traditional product silos, trying to build a more holistic view of the customer. But it is a real challenge when you've got individual product systems that historically have not been talking to each other, individual channels that haven't been talking to each other. So joining all that up is a real challenge, and is probably the biggest challenge that's facing the banks at the moment. There are a number of models globally where people pay for their banking services, and those banking services, frankly, don't look wildly different to the banking services that we experience here in the UK. So will we see radical new propositions coming in if such a model was to be introduced? Probably not. Would you see a period of disruption as people started to actually understand the amount that they were paying for those services? Probably yes. So if you did see a model come in, would the future state be something radically different? No, but would you see probably an accelerated period of disruption where those historic low switching rates maybe increase substantially? And if you did see that transition, you'd see those organisations that frankly delivered on the promise, delivered on value, would then pick up those customers. It's also important that there's actually quite a lot of fee for banking models already here in the UK in terms of paid for current accounts that have associated benefits associated with them. So it's not a model that doesn't exist in the UK and is already proven to actually deliver customer value. I think for those more traditional pure current account plays, what it does do is put real focus on the value exchange associated with, frankly, simple payment services. Well, if that's not the best possible experience, I'm going to be challenged why I'm paying for that. I see no value in actually just being able to pay money into the account and make transactions. So what you're going to find is actually there's two ways to go. I either make my current account experience the best it possibly can be, so I can compete with some of the things that we've seen from the challenger banks, and therefore I can charge for it, or I have to bring other things in to actually create value. So you're going to see you would see potentially a few different ways to play to demonstrate the value. The organisations, the banks we talk to, all of them recognise that the partnerships they're developing now will be fundamentally important for them going forwards, and those are partnerships with other financial services providers, but they're also really important relationships with retailers, with telecommunications companies, with marketing companies. So they recognise that those partnerships are important, and that is just going to further reinforce these sort of lifestyle and marketplace type propositions. And the point I made this morning is you've got to be quite careful how far you can stretch your brand. Whether I trust big bank brands to be the place that I go to choose and buy my shopping or electronics is very different from where I am today in terms of my relationship with that organisation. Why would I trust that brand over a price comparison website or the retailer itself? So the technology required to deliver it is frankly now increasingly a hygiene question. The real challenge is actually a brand and customer experience question, which is how do I build experiences that people want to use, but also importantly, can my brand stretch in the customer's mind to actually be authentic? And that's, again, something we're going to see people trialling propositions to do that, whether that's creating new brands, differential brands, whether they use the retailer's brand, but actually it's their platform sitting underneath it. Lots of different ways to play that we're going to see play out in the next 3 or 4 years.